Good day. Ira Epstein of Linn and Associates with your SPDR ETF wrap-up for this Tuesday, January 26, 2021. So tomorrow we're going to get the FOMC end of a two-day meeting. We're going to get at 1 o'clock p.m. Central Time. We typically get the FOMC monetary policy statement. You get a reaction from that. And then the Fed chair begins his 1:30 press conference. It typically goes to about 2:40 in the afternoon. And during that time, the market moves a bit on each statement he makes. Now, I don't expect the Fed to do very much on this. I don't think they're going to come into the new year as we've got these new strains and we're just getting everything going and saying, no, they're concerned about inflation and they're going to start raising rates. Come on. They'd rather see the overshoot and let it all pick itself up before that occurs. So be very patient with it. Build that into your thinking. You're in earnings season. You're getting a lot of companies making moves, and you're getting all kinds of rotation in these markets today between all the indices. The Russell lost to everything today, which was a surprise to me, and it's starting to lose all its bullish momentum. It might be ready to just sink back a little bit here. I'm watching it with great interest on the futures. Now I'm switching gears on you. I'm going back to PAVE. Why? Because Chuck Schumer is saying that, the Senate can pass the Biden infrastructure and some of the other moves with another way of doing it in the Senate. Well, if that is in fact the case, I think we want to be watching what infrastructure plays are taking place. And as you can see, this market's reaching down, trying to fill a gap that it left way back here at the very beginning of the year. This is a daily bar chart. The trend of this market has been recently to the downside. We certainly had an upward play, got it going into the early days of the Biden administration, but then the market started building in the factor of an even Senate, how it all worked out, split, and now the question is the sharing of power, and it hasn't liked what it's been seeing. I think that's the way to look at it. The trend is down until the market gets back over 2254. You've got the swing line down, the bias down. If you look at Bollinger Bands, you had been over it and then you peaked right in that area, came down. If you fell apart, 2090, but remember, we have that gaps. Gaps have a way of stopping declines if you start getting into them. So we'll see what happens there. As we take a look at slow stochastics, they're pointing lower, and the market, when it reopens, is probably instantly oversold. So my guess is as you fill or try to fill that gap, you're in oversold territory. You may run out of downside momentum. I don't like what I'm seeing on SMH. This is the first time I'm telling you that. If we take a look, you had an embedded reading, but on the close today, you closed at 75. As far as I'm concerned, that type of reading, you should be out of the market. Yes, you can re-embed tomorrow and you'll say to me, oh, Ira, you got out, and now the market's going up. It's okay. For those of you that follow me on my morning updates, you know that how we play those. That's the subscriber updates. And by all rights, out today. Take a fresh look at the market tomorrow. I don't like what this is doing, and because you closed at the lows, it's going to be very hard to re-embed and get that other 5 points back to tomorrow. When I look at the industrial sector, everybody says good things. This chart's bearish. Now, admittedly, you're approaching your lower band where I expect support to show up and you're already oversold. But this market has not been looking good. It's been looking on the bear side, not the bull side. That move might be coming to an end due to the oversold nature of the market. On the energy sector, you had an outside day down. Have I not been saying to you each time here, folks, I keep looking at the futures and I'm just not liking what I'm seeing, and I decided not to play. Now, that's a big difference from going short or long. This market up until today has not thrown out a legit sell signal. Why? Even though you had the decline with lower highs, lower lows, you were over the 18-day average. Now you're back under it. What would the pros look at to say, that was just a fluke getting under it? If you get through 42.64, today's high on Wednesday or Thursday, I think that proves to be a bear trap and you get a sizable bounce out of that. Make that happen and prove that I'm right. Let's assume it goes down. somewhere between here, and I'm going to guess right in this range, just under the 40 level is where I'm looking for the support to come in, about another $1. Why? Window envelopes that I'm not showing you here. I show those which are standard deviations from an 18-day average in my subscriber videos in the morning. I don't even need them on a chart. I can almost tell you where they're going to come in. On the QQQ, well, are we embedding? Okay, both numbers over 80 today. In order to embed, convert from overbought to locking in a bull trend, you need the two numbers that make up the slow stochastic to be going sideways for several days in a row or more, over 80. We have that today on the close. What about yesterday? Certainly had it yesterday. You had it Friday. So as far as I'm concerned, you got your embedded reading, which tells me the traders are probably looking to buy this market on the breaks until the red line closes back under 80, looking for the higher prices. This market's suddenly getting stronger than a number of other markets. What about the emerging markets? Well, they're fighting a battle at the 18-day average. This is an overbought market that has not gotten away from the overbought status in an overall downtrend. As we take a look here at gold, what is the gold doing? Well, the gold market is still fighting, as I've pointed out to you now for about a week, at that 200-day moving average. It's staying oversold. It's not offering much of anything. It's boring, to make it very, very simple for you. This is just plain boring. It seems to be caught between the 200-day average and the 18-day average of closes. As we come over to the gold miners, I'm looking at these, and I don't know why these changed to green. I'm trying to figure that out. I know that I did an update on my charts today. I'm talking the whole software package, and I wonder if that did it, but I'll fix that for tomorrow. As you look at GDX, if gold's no good, sometimes GDX can be ahead of it, but it's not in this case. You have lower highs, but higher lows. I don't want anything to do with that market. It's also oversold. Hands off, not interested, but certainly not bullish. Now, TLT. We went right up to the 18-day average, stalling out right in front of the FOMC meeting. Are you surprised? I'm certainly not. Let's wait and see what the FOMC says before you do anything there. And last, on the FXE, you're still oversold. You have a contra trend. What do I mean contra? Because you're under the 18-day average, the bias is down, yet the swing line's pointing up. The two fight each other. Nothing you can do. You're not embedding. It's a market that, like gold, so long, don't have to do anything in your backyard there. That's how I look at a lot of these. So, one of the things I try to do is let you bounce ideas off a seasoned pro. Not that pretty girl, me. A lot of you write me emails. I do my best to answer them. What I'm not going to do is tell you buy here and sell there. I'm not a registered stockbroker. I am a futures registered broker. There I can play my own game. But that doesn't mean I can't help you with these markets. And I will answer the questions as best as I can. But in the morning, I'm going to cover for you about 41 charts. I do that for you now this way. Let me tell you how this all works, because I did change everything. I do a futures video first at 5:40 in the morning. I give you the news, what the market's looking for, the news from Asia, Europe, and what the market's looking for in U.S. news and any events that have happened. I use that same news, but I update it. And at 8:40 in the morning on the SPDR ETF, I've got the updates as they've come out. Then we're going to cover all these charts because the market is now open in the SPDR ETFs. And I'll record and get this out to you ideally between 9:10 and 9:30 in the morning Central Time. It's not even an hour of open, but I want that to get into the market. Why? Futures trade 23 hours a day. You don't get anywhere near the same amount of gaps and movement that you do on SPDRs and ETFs, which are an 8-hour-a-day vehicle. Let's face it, that's the charts we're looking at. Yes, you have aftermarket activity in certain stocks from third parties and so on. Okay, but we're not looking at stocks. We're looking at SPDRs and ETFs. Got it? That's what we want to focus on. So at 8:30, I'm updating. At 8:40, I'm recording. You're looking at what I'm doing shortly after 9 o'clock, getting ideas on about 40 charts. the ideas that I've got there. I will mix daily and weekly charts during the week, and on the weekend I do primarily weekly charts for the longer term trader. So there's a shorter term trade and a longer term trade at work. You can give it a try. $8.95, 26 videos a week for that price. Now let's think about it. You're going to get about 100 videos for the month. You decide if it's worth it. Each of those are going to be in the neighborhood of 15 to 25 minutes long, but I break down the sections that you're in. You don't have to look at each section. You pull on a website, the bar, it's going to light up and tell you what section you're in. You could watch it also on a smartphone, on tablets, anything that you've got. We give you the free software to look at it on your Android or your iOS system. Give it a try. Read about it. Go to www.iraepstein.com. Look at the word research. You take it the rest of the way, or call my staff. They'll work with you. I'm Ira. You have a good day.